fundsupermart.com.
Hello everyone. With us today is David, the Investment Director at Eastspring Investments, and he's going to share some of the opportunities he sees in the Asian bond market. Hello David. The market's concerned about the Eurozone crisis, which should remain unresolved in the mid-term. So why is Asian bond a good investment option now?
Under the current market circumstances, investors are facing a dilemma. On the one hand, if investors don't want to face risk and invest in risk-free assets like deposits or even US treasuries, the return is minimal. But on the other hand, stock markets are very volatile these days and may not be suitable for every investor. So we believe that under the circumstances, Asian bonds offer an alternative for investors, which offer them a higher return than risk-free assets, but on the other hand, is less volatile than stocks.
What are the opportunities and risks that you see in the Asian bond markets?
Okay, before we talk about opportunities, maybe we should talk about risks first. We all know that investing in bonds involves three main risks. First is interest rate risk, second is credit or default risk, and third is foreign exchange risk. For the first interest rate risk, we believe that under the current market circumstances, the chances that interest rate will go up rapidly is very low. But we know that if interest rates go up, bond prices will go down and vice versa. So since we don't expect interest rates to go up very fast, so interest rate risk at the moment is pretty low. On the second hand, regarding default risk, when the economy is not good, default risk will tend to increase. So in this case, when we invest in credit bonds or corporate bonds, because there are a wide spectrum of corporate bonds from investment grade to non-investment grade. If we invest in non-investment grade at this moment, we may be facing a higher default risk. So that's the second risk we have to consider. And the third is foreign exchange rate risk. If a Hong Kong investor invests in a non-Hong Kong dollar denominated or non-US dollar denominated bonds, then he will face exchange rate risk. And under the current circumstances, because of risk aversion, we believe normally US dollar assets will perform better than non-US dollar assets. So this is the third risk we have to consider. So under all these kind of risks considered together, we believe that bonds as a whole, because interest rate is likely to remain low, so it will favor all kinds of bonds. So that's the first. And second, we believe that although default rate may increase in the current circumstances, we do not need to avoid the non-investment grade or high yield bonds altogether, because among all these high yield bonds, there are still some that are good quality, which give you quite a high return but acceptable risk. And on the third is about non-US dollar bonds. At Eastspring, our own internal view is that in the medium to long term, we are still positive on Asian currencies. But in the short term, US dollar asset may perform better. So if investors want to invest in non-US dollar bonds, then we have to take a longer investment horizon, because in the short term, there could be considerable foreign exchange rate risk.
Which sectors are you overweight and underweight?
As I manage mainly the Asian US dollar bonds funds, so within the funds I manage, we are taking a more defensive stance right now. For example, within the investment grade category, we would invest in high quality corporate bonds, for example, those SOE in China that are owned by the central government, or those government-linked corporates in Korea. These are more defensive, which means that they are less volatile. On the high yield side, we also found some good opportunities among the better quality BB names that also offer good return with acceptable risk. For example, some of the Indonesian coal company or some Philippine blue chip companies' bonds. In addition, even, for example, in China, some of those Chinese properties companies' bonds are offering quite good risk-reward profile. Those are also some of the bonds that we are focusing on at this moment.
While the global outlook remains uncertain, what are your advices to investors who are looking to invest in Asian bonds?
As I mentioned earlier about the risks in investing in Asian bonds, first of all, it's about default risk. We think that investors, if they invest in corporate bonds, we would advise them not to be too aggressive at this moment, because default rate default risk could be on the rise. So if they invest in high-yield bonds, we would suggest them to carefully select those that are better quality one and don't just chase for yield. And on the other hand, in addition, if you want to invest in non-US dollar bonds at this moment, we would advise investors to take a longer term horizon, because in the short term, Asian currency bonds may face a high volatility than US dollar bonds.